Today, once again, we are in a beautiful studio and we have birdies up there. God, I hate those little shits. Today we are discussing how correlated are all of these assets we like to talk about. It's a thing that came up in the YuGiOh investing Discord. If you're interested in that, link is in the description. And essentially, the question is, would cards go up or down depending on how crypto is doing? Would stocks go up or down depending on how crypto is doing? Would stocks go up or down depending on how cards are doing? Or vice versa? So let's talk about that. How much of a correlation is there in the movement of these various assets? Now, I will say, this is all speculation. I don't actually know for sure if there is a correlation. I'm sure you could zoom out enough to assume that there is one, or you could zoom in enough to assume that there is one. This is just about the thoughts and concepts that I think of when considering the possibility. So first of all, what kind of correlation is there between cards and crypto? I can tell you that a lot of people are trying to buy a lot of these expensive cards with crypto. We have guys who speculated on stuff like Bitcoin, Ethereum, XRP, ADA, all of these beautiful, beautiful cryptocurrencies. And so now that they have these gains that they maybe want to take out of that market without going through certain means, without maybe the tax department noticing, they will go, hey dude, I'm trying to buy this Blue Eyes White Dragon. I know it's 20k, so can I send you a Bitcoin? Or at least a few months ago, I guess now it's too much, but hey, maybe a few days from now it won't be too much. So first of all, there's legit guys who are just trying to use collectibles to dodge certain things. But beyond that, there's also guys that now have spending power that they normally wouldn't have had without crypto. They don't have insane jobs. They don't have some magic investing insights or anything. They just got really, really fucking lucky. And so now that they have all of this money that they don't know what to do with, they're trying to invest in the next speculative thing. And so they go, oh, I'm going to put that money into cards. And so again, there's a lot of guys who are crypto rich, and because of that they are card rich, but they don't have any other way to generate spending power. They never generated enough cash flow to actually be able to buy any of these cards. And so what happens if crypto crashes? Well, their wealth and their cash flow crashes with it. A lot of those guys actually wouldn't be able to buy some of these cards without those crypto gains, let's say. So that's a very important one. And that's not a majority of the market, by the way. I would estimate that that's maybe 2% of the market, maybe 5 max, but still, that's a pretty important number. Now, I'm sure you're saying like, no way, all the YuGiOh investors aren't 5% crypto guys. No, but I'm saying the higher echelons, the guys spending the 5 figures a month on cards. I'd say 5% of those dudes are also crypto rich. So that's correlation. That's correlation right there. The second all of the crypto shit crashes down, those guys are no longer able to buy cards. And maybe they're even forced to sell certain cards in order to cover their leverage, because they always trade on all that beautiful, beautiful margin on the cryptocurrency as well. So there's even more ways to see correlation there. So that is one correlation. Now, I already gave you a little bit of a hint there. I mentioned leverage and margin. A lot of the guys being crypto rich like to use that leverage margin in order to have, insane returns. But that also works the other way. The second the market turns, these guys get wiped out instantly. I read a story this morning about a guy who killed himself because his entire account with all of his life savings was wiped out because of crypto. And there's many stories like this. Most people don't even post it. So there's so much leverage in all of these markets. And when they then need to cover certain positions, sometimes they just put up collateral of the crypto itself. Sometimes just the account itself being levered up. But sometimes their credit card is also linked to it. There's certain platforms where you can link your credit card. But I don't really know the specifics of how high they can really go spending-wise. Regardless, there's also massive institutions and organizations using leverage. And again, those guys usually aren't just in crypto. Very often they're also into regular markets. And so there's also Robinhood, for example, where guys are able to trade with insane amounts of leverage and margin. And once again, those are also the kind of risk takers that love crypto. So once again, there's a very big house of cards, essentially, in speculative stock trading, speculative crypto, and then a lot of those guys often also speculate on other stuff, whether it's sneakers, collectibles, cards, anything really. But that also means that if a market really turns and these guys are levered up, then not only do they get liquidated, but they might even owe money. They might even have some loans running and stuff like that. What do they sell to cover that debt? Well, either the other positions, whether it's crypto or stocks, but also They're collectibles because they'll be forced to, because otherwise, well, then they go bankrupt. And if they go bankrupt again, their collectibles would be liquidated unless they hit them from the government and so forth. So I'm hoping I'm starting to paint a solid picture here. A lot of leverage and margin is being abused right now in crypto, in stocks, not so much in collectibles, but collectibles are more like collateral damage, let's say, because those guys would need to cover their positions by selling stuff, and that is like the easiest, most liquid way to get quick cash, you know, sell your card that's worth 5 figures and boom, that's one thing at least covered. Now beyond that, of course, if the stock market really takes a deep dive, a lot of companies will have to do layoffs, and when companies need to do layoffs, spending power decreases, so suddenly you have less people being able to spend on other stuff. So overall, that usually has effects on people's purchasing power. That means any stock market crash should affect other assets, not so much bonds. That's the whole point of diversifying with them. Now, I have read an interesting book. I think it's called Investing in Collectibles for the High Net Worth Individual or something like that. Interesting book. It looked into how correlated collectibles were to the stock market, and they noticed, oh, it's not very correlated. The thing is, the stock market right now has such a new form of speculative frenzy because retail investors, you know, regular people suddenly have access to all of this margin through Robinhood and apps like it, that I don't know if this time will be different, and it might be. So just be very aware of that. Currently we're seeing this massive crash in crypto. I don't know if it'll have recovered by the time this video is up, but it's very possible that weakness in that market also affects other markets around it, because again, a lot of these big spenders just have a lot of that spending power because of that crypto cash flow, and it's a pretty important thing to be aware of. Similar story in the stock market, but not as much. You know, if you're a guy who's usually just boglehead investing into Vanguard index funds, you're usually not so much into, you know, speculating on collectible cards. I am, but I'm more of an outlier in that regard. Unless, of course, you're YOLOing on meme stonks on Wall Street bets, then, of course, you are part of that little interesting bubble in the stock market that might pop at any moment, and that might actually also affect collectibles. Regardless, that's again speculative. I don't know if that'll happen, but it's a possibility. Hope you found this interesting. Be sure to like, comment, subscribe, and I will see you soon. Ciao.